Hey, Boyd. JC here, along with my good pal Boyd Brooks
How you doing,
on
JC?
episode 11 here,
Number
Boyd. We're
11.
just clipping along here. Took a, I don't know, 10-day hiatus while we were out and about doing crop tours across the South. And Boyd, I hear the road took you out to like Indiana or
I
Michigan,
was I
or
was way north of my comfort zone. We'll put it that way.
it's all the same damn thing
Yeah,
anyway.
once you get north of the Ohio River, it's all bad. So
That's right.
now I was meeting with some folks up there working on maybe a new project, but yeah, we're back home in South Carolina, so it feels a lot nicer.
Absolutely, man. Well, I hope the road treated you well, and I think we got a lot to talk about, man. From the last time we were in front of these cameras, to now we've had some volatility in the market. How's everything looking your way?
Yeah, volatility has been the name of the game. So I think we recorded that last episode back on the 7th, 6th of May.
Oh wow,
And that was probably close to the high price in corn and beans. And then we had $1.20 drop in corn and $1.40 drop in beans. And now we've kind of gone back up half of that in about 4 sessions. So yeah, the weather market is here. The volatility is here for the summer. And be proactive.
be proactive. I
That's
think
what
that we
I'm
were.
telling my customers is like, look, I was kind of patient waiting on the top. I think we've seen it unless we have some drastic weather going into, late June, early July. So you get back up to these levels and it's probably time to start doing something. I'm not saying you sell 100%, but it's time to start putting the floors in under this market for sure.
If you were waiting to see as pretty as it could get, you think that we got a glimpse of that, huh?
Yeah, unless you burn a crop up, man, I'm hard pressed to say that you, in corn anyway, that you go much higher than where we were. So the high on December corn was 638. Today we're at 578. Um, is there a reason for us to go above that in the next 3 weeks? I don't know. We've rallied 70 cents in 3 days or 4 days since last Wednesday's low. So why? What forecast? What data point drives us up another 60 cents? I don't know where it's at. And if you look at the charts, I mean, this is a technical textbook type number where we went from the high to the low, and now we've retraced about 50% of that move. I mean, it's impressive. It typically doesn't happen that fast, but in volatile markets, it can. So it's time to start jumping on some stuff here, is what I'm telling my customers.
Understood. And I mean, in fairness, I think I say it's really just you. I'm going to act like I'm a mouse in your pocket, but we're pretty much singing the same song during our last podcast, where didn't feel like this was going to stick around for too long, and might be good to get something done, especially with basis opportunities being what they were. You put your hands together on that. You weren't missing much right there.
Yeah, and I mean that's like I said, that was one of those markets on the way up where I was willing to wait and look for a top and say, okay, I may not hit the top, but I sure didn't sell it 20 cents up every 10%.
Right.
And so at the end of the day, waiting was a better strategy, even if you're 60 cents off the high. So it's just one of those markets where it's a lot different than it has been the last 5 to 6 years. The last 5 to 6 years, it was like, man, you got to sell rallies. As soon as they happen, you better be selling them, because that's the only opportunity you're probably going to get.
That's right.
This year with this bull market run, it's a little bit different because we've just been going straight up. And so now all of a sudden, it seems like unless we get weather, we probably topped out. And so now is the time to sell rallies rather than selling rallies from $4 up to $5 to $5.50. Am I right? I don't know. I mean, you tell me what the weather is going to be July 20th in the Midwest, and I'll tell you if I'm right or I'm wrong. But the only thing I would add to that is the fundamental situation is tight enough in both corn and soybeans where any production issues are going to be important. 2 years ago, last year, North Dakota corn acres didn't matter. Soybean acres didn't matter. We had plenty of carryout. This year, they matter a lot because those extra 500 million bushels are the difference between being real tight on old crop carryout or having an excess. And so the game has kind of changed. The other thing to throw into this is the inflation trade is kind of back. You had China clamping down on speculation in their markets 2 weeks ago, 10 days ago. They said, look, we're not going to let these financial advisors sell products to, small time investors. They said, you got to get out of those positions. Only if you can hedge it is the reason that you should be in the market. And so I think that's where the lumber sell-off started. You saw crude oil down 5, 6, 7% from the highs. And so just the last few days, we've seen that kind of turn around. And so crude's back to 68, corn's back up, lumber's back up. It felt like today was a combination of a little drier forecast and the clamps on the Chinese speculation coming off a little bit. So, again, if I'm a technical guy, if you look at these charts, that's a perfect retracement. So do something. I don't care if you buy puts. I don't care if you sell cash, whatever. Do something. Because this is the number that I was looking for on corn and beans to get back to.
I also saw that there were some reports of freezing across the upper Midwest, potentially, adding to the, you said a little drier forecast, and also that cold that came in whatever week or so ago. What do you feel like? I mean, you think the damage is done there? You think that we've seen that get priced into the market? Now we're going to need other news that continues to move it.
I mean, I'd say you probably priced that in. We went home Friday with cold temperatures forecasted, but there weren't frost and freeze. And so that happened Friday into Saturday night in a lot of locations in North Dakota, Minnesota, northern Iowa, South Dakota. So there was some damage done. Nobody knows yet. Right. It'll take 4 or 5 days. Do we need to replant that, or is that okay? So if they need to replant it at 575 December futures, if they can get the seed, they're going to replant it, right?
Right.
So those acres will be there. But, if you're looking for a perfect growing season, planting corn on June the 6th, that ain't it. not
That's right.
ideal. So there's still some risk in there. I mean, there was the stories of the beans being zapped on some stuff as well. So, you know, we've got some issues, dryness, cold in June, which is abnormal. Where do we go? And so that's what I try to do is like, all right, what is the most bullish news you could get from here?
Yeah.
Is it
Hot and dry in July. I
is
mean,
it is it a
that's about it.
July 4th freeze? Is that the most bullish thing you could get? I don't know, but
May as
yeah,
well just add it to the list at
add
this
it to the
point,
list. Yeah, it's 2021. Everybody thought 2020 was so bizarre, but 2021 is turning out to be pretty weird too. So yeah, I mean, but that's the problem with these markets. If the forecast finally breaks and turns wet and cool, this market might be done.
Right.
And so here we are. Last Wednesday, everybody's crying because we're back to $5 December corn, and we're back to 13.20 soybeans. Here's our opportunity.
Yeah.
Let's do it. Let's do it. Is it the high price that we saw? No, but it's definitely not the low price we're going to see.
No. No. Shift gears for me, Boyd, and talk to me a little bit about the cotton market. We've seen some volatility lately in that cotton market too.
Yeah, I mean, really, the cotton market has been fairly calm compared to corn and soybeans.
Well,
We've had a 400-point range for the last 4 or 5 weeks. Well, I guess 3 weeks. But it's not been nearly as volatile as corn and soybeans. So we went from 86 back to 82, or back to 85.
right.
It really hasn't done anything like the corn or beans have done. And there hasn't been that much news. We had decent export sales last week. They were up versus the 4-week average. China continues to buy. And I apologize for my voice today. I did a lot of yard work and I'm really congested. But so we're back up into that 85 range. I still believe on June 30th, we're going to see acres come down on cotton, acres go up on corn, probably acres up on beans. And so I think, the cotton, that's going to be the trigger for that to maybe run back to that 88 to 90 cent range on new crop. Because the old crop demand is there. It's good. I think the new crop demand is there. It's not shown up on the export sales quite as much as the corn has from China. The last, 2 weeks, we've had big export sales on corn. They have not been aggressive buyers of beans yet or cotton, but that's going to come at some point. If they're of the mindset that we're going to continue to grow our economy, that's going to come. So I'm still patient on cotton pricing at these levels. I mean, from a speculative standpoint, you get back in that 50 or 100-day moving average at like 82.20, 82.30, 50 days at like 82.70. So if you dip back down there, maybe you look at some calls from a speculative play. I mean, obviously, if you're long the crop, that's nothing to add risk. But if you want to re-own some sales, not a bad spot because we've held that support for the better part of 8-9 months, and we're still just on a perfect uptrend line from those last April lows if you're a technician. So the cotton chart looks good to me. You get up in that 88 to 90 range, I think it's time to start taking some action.
Yeah, I'm happy to see the mid 8s again. I honestly for a minute thought that, and I guess when I say volatile, more so in my mind than anything else, but I really felt like for a second we were going to see a 7 in it for a little while, and then who knows where we went there. I'm happy right here. I'm with you. When the acres come out, I feel like we'll see um, a
Well,
higher 80 number, but that's just,
yeah, and
you
all this stuff's going to benefit from the inflation trade, right? So that's the other part we got to keep an eye on. If the housing market starts to set back, if crude starts to set back, if we see GDP slow because of, higher prices, then we get concerned. But overall, our commodities are benefiting from the inflationary hedge. So
right.
the banks, Goldman Sachs, Citigroup, Bank of America, they're buying this stuff as a hedge against interest rates going up. So we're in a good spot, unless you're, trying to borrow money 2 years from now, you're all right. So go borrow your money tomorrow and just buy something as a hard asset, and you should be fine. But
I'm with you. Here, Texas is actually getting the water that they need right now. That I don't know. I think again, when you look at your scenario, what's our most bullish news on cotton? It really would have to be the acres coming out on the 30th.
I think so. That pattern seems to have shifted out west. They're getting some rain, but you cut 700,000 acres off.
Yeah.
Now, that's probably the spike that you need to sell, right?
Right.
Because if Texas is getting rain, all of a sudden they're not raising 600-pound cotton anymore.
Mm-hmm.
They're at 750.
That's right.
So yeah, I mean, if you get back towards those highs, I think the December high was like 89, 90 or something. You get back towards those levels, there ain't nothing wrong with that. The
No.
same thing with 575 December corn, or 1397 November soybeans, or 692 July wheat.
Yeah.
Why are we not selling it?
It's amazing how picky we get up top. We've gone from barely penciling out profit.
And I get it.
For the last
You
few
need to
years.
make all you can. Right?
100%.
We need to make
100%.
every penny we can, because those last 2 or 3 years were pretty tight.
That's right. But we're here.
But we're here.
We're here now.
And look at your numbers and look at your spreadsheet, talk to your advisor and say, look, hey, let's pencil in a worst case scenario. And
right.
let's put it in a piece of paper. Let's put it in a spreadsheet and say, hey, if I make X at X price, and then go protect it. Figure out a strategy to do that, whether it's buying puts or whether it's your crop insurance or whatever. But there's an opportunity here in the next 2 to 3 weeks before this June 30th report, because that report will change things, in my opinion. It may change them to the bullish side, may change them to the bearish side. But we've been bullish at that point, it will be 11 months. Typically, bull markets in commodities don't last that long. So I'm going to hedge my bets to the downside if I'm a producer.
That's right.
Just take a look at those numbers over the next 2 to 3 weeks. Like I said, that report's going to be huge, but a forecast shift between now and then could be just as detrimental. I mean, go back to last week, we lost $1.30 in corn. So that's
quick.
That woke people up, and that's a good thing. Now
That's
you've
right.
rebounded. Let's take advantage.
That's right. what are you hearing about conditions throughout the Southeast? Well, I'll tell you what, man. I was I'll go first on this one. Just I was just in Georgia, drove down from just through the middle part of the state to the south central part of the state, and they need rain. They need rain bad. We made our little tour and went back up through southern part of South Carolina, and then ended up in the PD region, and southern part of South Carolina is okay, but they could use a shower, and the PD getting over there towards Myrtle Beach is dry as hell. Lot of North Carolina just got what a lot of folks call the $1 million rain,
Yeah.
where if it wasn't for right then, it was not going to be pretty. And so I think most of the state got what they needed. And I guess that'd have been Friday.
Yep. Exactly.
When that system came through. And you know, I think that we're gonna have some production problems throughout the Southeast, and where we've missed a system, where it's just been spotty rain. This week will tell the tale, just to say it, through my neck of the woods here.
Yeah. So I think your Mississippi, Arkansas Delta, they've been pretty good over the last 4 to 6 weeks. Got a little hot down there, even up into Tennessee, and my guys in Tennessee were needing a rain. They got one last Thursday. Wasn't the $1 million rain, let's call it the $50,000 rain that they got,
Right.
but it staved off the hot temperatures. It looks like over the next 2 or 10 days, what is today, Tuesday, they've got a chance, 40, 50, 60% chance now through like Friday.
Right.
So I think they're feeling pretty good about that. Now, obviously, you're getting into wheat harvest time, so it's a mixed blessing, right?
That's right.
I wanted to rain on my corn, but please don't sprout my wheat. But yeah, I think the conditions that I hear out of Mississippi, South Alabama, it's been unseasonably wet and cool. And then it seems like that rain kind of stops as it goes through Georgia into South Carolina, North Carolina. But I think we've got a decent shot this week too. 40, 50%, Wednesday, Thursday, Friday. So hopefully that'll hit. But I think overall, that rain in Kentucky, Tennessee last Thursday really helped a lot of stuff for my guys that I talked to. And then, Mississippi's going to be, some guys 7 weeks from harvest. So
wow.
I saw somebody harvesting corn in Texas, South Texas today. So, it's coming on hot and heavy.
Yeah, that's right.
Again, that goes back to the inverse conversation, right? September, December corn inverse today is 25 cents. If you got an opportunity to get some of that sold against the September that you have to move, keep a close eye on that, because that thing's going to break at some point, in my opinion. So,
in my opinion,
which is always wrong.
Oh man. So anything that we need to be looking out for other than weather concerns in the next week here, Boyd? What are you paying attention to moving forward?
So I'm looking at this market technically more than anything at the moment. If we can keep this thing going above this 66 in corn and 1380 in beans, and that's December and November contract, then we've probably got some time. But man, I tell you what, by this June 30th, it's going to mess things up. So you got to be doing something before then. I don't think next week's USDA report will have a big impact because they're not going to change any of the new crop numbers. Maybe they'll adjust some demand. but it won't be anything drastic until that June 30th. So that's kind of what I've got my eye on. I think you got 2 to 3 weeks here to hedge some very attractive levels.
Yeah.
You know, if you're a wheat grower, July 22 wheats at 689. I've been advising my folks to get a little bit of that sold.
Mhm.
You know, these 22s at $5, those 22s at 1271. Input costs are going to dictate that, but if you know you can offset some costs with those levels, not a bad place to start looking at it. So that's what I'm looking at. Is I think we've got a window here, and I can only assume normal weather, right? If I assume
Right.
that temperatures are going to be normal, precipitation is going to be normal, that's all I know. Then,
Speaking of $1 million words, man, normal these days.
yeah, normal's $1 million word. But if we've got some somewhat normal forecasts, you know, the risk premium can come out of this market a lot quicker
Right.
than it went in. So
That's right.
take advantage of these opportunities is what I've been talking to my clients about this week. And it's only
That's right.
Tuesday, and that's why we're recording this podcast at 4 o'clock. So
I hear you.
it's been a wild day.
This week, yeah, I feel like I lived a lifetime since it got cold in the Midwest. Apparently, week and a half. It's been like 4 days.
Exactly.
Whatever. Oh God. So just on my end, that there's just a lot of speculation around policy. We still hadn't heard anything, and I don't know if we will coming out of Washington until the ink dries on whatever paper they're tossing around up there. But one thing I do want to say about just the crop insurance piece of the puzzle and this whole risk management equation is 7/15 is the date that a lot of you have to have your acreage reports in. It's also the date that the FSA has on their deadline too. If y'all can get to the FSA office, a week or two early with those acres and or send those acres into your crop insurance agent, that is gonna give us enough time to review that, make sure that all your I's are dotted and T's are crossed. Because if there's something missing after the 15th, it's really hard to correct that. The FSA doesn't like to change anything. And honestly, you don't need the FSA to certify those acres. You can put it down on a spreadsheet and work through it with your crop insurance provider. But with that said, there's some obstacles to avoid if you get that in early, and sitting down with somebody that goes over that, y'all can figure that out and make sure that you're not writing down any date that isn't correct. That's either after a plant date or making sure that your irrigated acres are certified as such, and all of those things that with the FSA offices being short staffed and farmers having to really do the heavy lift on certifying acres and those acreage reports, it's imperative that you are checking and double checking. And honestly, it should be with a third eye on it, not even a second eye. I mean, you need a couple of folks looking at that just to make sure you're not stepping in it, because if it's time to get paid and there's a oops moment, you'd rather the oops come before that check's about to be cut. I'm promising you. And failed acres too. You need to let somebody know as soon as possible about failed acres. There's a right and a wrong way to do all of that stuff. And if you react to failed acres prior to 15 days after planting, or have a knee-jerk reaction and put a claim in, it can affect how you're paid on that. And the same thing with prevented acres. There's good and bad to do that. So make sure that you're in communication if you've got any issues with your crop insurance agent, because it can be the difference in getting paid the way the policy is supposed to work, and having some income slip through the cracks that you're paying good premium dollars for. That's really my, prior to the heat of reporting. You're probably going to hear me say that 15 times on the podcast. Matter of fact, Boyd, you might not even need me here, Matt. I just put
That's
a little
good advice, JC.
stick
I
up
mean, I
right
think that
here.
should be like the disclaimer on the podcast. Talk to your crop insurance agent. That should
Right.
be what you do.
Open
Maybe that's
up
just
with that
because
and
you're
watch you go.
bored and you want somebody to talk to when it's not
Nope.
selling season.
I haven't been bored since 2015. Prior to that, man, June, I wouldn't even tell people what I did. I mean, June, July, I'd just be cruising around, seeing the world with
There
the
you
family.
go. That's right.
Those days are
Those
over.
long gone. Long gone. Yeah.
Long gone, man.
Absolutely. No, I think that's always good advice. If you got something that needs attention, bring it up and attack it from the front. So
Better to know early than have to react to it late.
correct.
But anywho,
Yes, sir.
I appreciate you, man.
Absolutely. We'll
Let's not wait so long to get another podcast out there.
Well, if you stop driving around the countryside, maybe you can come back and we can do one of these next week, or even maybe this week. So
listen, Michigan boy, we all know.
I won't go back. I promise.
Don't ever. Don't ever.
All right,
All right, man. Until next time, be good.
Yep, we'll see you.
Thank you, buddy. Take care.
Bye.